Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. How we doing, Barry?
Doing good, doing good.
Good. We're here recording on Saturday morning, the 17th of January, and the theme for this week, when Barry and I were talking, is it's Groundhog Day because we are pretty much in the same spot we were last week. We're still sitting at the table smelling odors coming out of the kitchen, but still don't know what's for dinner yet. And one of the hardest things to do in trading, but one of the most important skills is to wait and to be patient and to wait for the proper setup. And it's kind of where we are, wouldn't you say so?
Yeah, well, how to argue with that? Look at this. This is what we're dealing with. So
Yeah. Yeah, I mean, I think that
very tight range here. So
I don't follow
mhm.
it closely, but I think the Russell's been really good. I know the commodities that I follow closely, so many of them are going sideways. The bonds are
Mhm.
going sideways. It's just it's a we're coiling up for something big, and a big move is
Right.
coming. So we have to stay engaged. Don't get distracted because it's coming.
Yeah, for sure. And today, if we have time, I was gonna mention maybe after you finish, we can take a look at the fuse lines because we've had some people
Sure.
curious about that. If we have time, otherwise we might do a separate video later.
I mean, that's how
Um,
that's how we've been scratching out, some shekels is basically trading off those
Fuse
short-term
line,
fuse lines. Yeah,
exactly.
while
And
we're
and you're gonna
stuck in
cover
this
cocoa
range.
today because we had a couple of requests for that.
Yeah, we're going to cover cocoa. We're going to look at the monthlies, weeklies on gold and silver just to show sort of where we are and how we got here type of thing that might give people some perspective. I know I saw some people asking about silver, so let's jump in. I know that it's sideways, but we did get some clues this week, and we're going to try and talk about those clues and see what we
Yeah.
can do with them.
Yep, yep. We should just talk about the 30-minute. And
Yeah, true,
you
true.
know, all right. We're looking at the S&P cash. We drew this trend line last week. So the first thing we notice is trend line is holding. And the other thing is this 7/8 line at 69.10, 69.09 right there is also holding. So basically, I think, if you want to look at it, if you want to draw a horizontal line here to the tops, you could say, we broke out, a little bit of tiny breakout, and we came back to retest. We're not sure if the retest actually passed. It's holding above. We had 2 days down, and the pattern is really most bullish looking. So the story so far, you guys are new. We've talked about cycles that came in, right in the early first week of January. Now, what happens is, sure, it can be off by a couple of days here and there. That can happen. And when these cycles come to expire, we look to see how the pattern matches that cycle, and then we look at through the lens of the squares to see to see how we can participate. Now, what happened here is by the time when the cycles hit, we're also up 270 degrees from the April low, which is resistance. So the whole story was, well, 7,000 is resistance, so we're, sure, it can, markets can always stop a couple of points below the exact line, but we're in the range, right? We've been in the range since November. We ran up to the 7/8, so we thought, well, 7/8 often stalls out a market or stops a market, or at least causes it to correct and balance price and time, which it did the first time it hit it. And then we came back the second time, just a little bit of a pullback. And now we did this A, B, C, D up. The D is kind of faltering. So we're holding here. The interesting thing is because we had these other cycles expire and the fact that we didn't correct in price, we're kind of correcting in time. I mean, that's what this is, right? We're joking about the sideways and groundhog, and it's just a big bucket of confusion. But it looks like that. But the other thing that's happening is it's correcting in time into the price. So when that happens, you always have to keep one. Well, like Ben, like you always, when that happens, you always want to look at both sides of the street before you cross. And that's the case here. We want to, because those things expired, If we somehow take the 7,000 out, we could fly, right? There's no question about that. Holding above 69.09, now this is based on the cash, right? Is positive. And the fact that it's going sideways, right? We didn't correct down to 68.20. We didn't correct down to, 67.50 and then recover. Like here, this is a correction in price, right? Correction in price. Well, price and time, but price mostly, right? That corrected back up. Now here it's in time. So all that to say, there's a good chance if we take out 7,000, we can go higher, right? It opens up a whole nother square. And I wouldn't be surprised if we don't stall out until we get to the next 50% level, which is 73.60. And why stop there? We might as well hit
Right.
7,500 all
And
the
then
way.
and then there's the whole thing of the repeating pattern from last year at this time too.
That's true. That's true. So that's the upside. So what we're
Right.
talking about, okay, we're correcting in time. We're holding very tight. Now, the other side, of course, is this what seems to be a breakout ends up becoming a false break, which we talked about last time or last couple times. And then we roll over. So if we roll over here, then I think we have much bigger correction than people think. Why? Because of the bigger cycles that expired. And sometimes, when you correct in time like this, it sort of compresses. And when it releases, whichever way it tends to go, obviously, right? That's what consolidations are. If you look at consolidation, anytime after one, there's one here in June, anytime after that, we take off, right? So, and if you go back to the early part of the 2025, that whole consolidation we have for two and a half months, and then we released late February, and that was went all the way down to April. So that's what can happen. Maybe not so much, maybe a little more, but we'll have to see. We have to, we're playing week by week, so we'll have to see what the pattern looks like. But I just want to look at the possibilities because yeah, it looks like it's not doing anything, but don't fall asleep at the wheel because this 69.09 and the fact that if we break that and counter trends can't quite get above it because now we have a little bit of overhead, right? We have a little bit of overhead, a little bit of an overhead island right on top of 69.09. And it just happens. It's just 69.09 is not just drawn out of the thin air. It's connected to this cycle. It's connected to the beginning of the cycle, April. So there's a lot going on here. We don't have time to talk about every little detail every week, but we both try to hit different angle, different aspect every week, right? So as we go, you guys have a better understanding of how we're looking at this and why the prices are behaving in a certain way. So here we know there was resistance. Like if I took this out, you'd just be thinking, oh, it's 7,000 is a hard number. So obviously there should be resistance there, or there's a gamma buildup there. But what's funny? We've had that line there ever since April when we didn't have a gamma buildup. You know what I mean? So looking through the lens of these squares helps us to anticipate the odds of the next move. And here, the whole funny thing about not knowing what's for dinner is because it's a very odd place to get stuck, and it's an odd place to burn out burn out price, right? By going sideways. So what's up for next week? Well, I think basis the daily, we'll get into the short-term time frames in a little bit as soon as I finish this segment. But I would watch basis the daily. 69.09 is the big deal. You can see we poked down there and we got bought up midweek, and the other side is 7,000. So we see that's a bracket. The other thing is because of the pattern, we can move hard in either direction. So we don't have to catch the first day of the directional move because I think whatever comes out of this is going to be big enough. Anyway, we're watching the trend line. It's probably going to, obviously it's going to break, next week. So we'll see how it breaks. It's going to break unless we take off on Monday, it's going to break, right? One more day of consolidation, 2 more days. We wait for FOMC. It's probably going to go through it. We'll see how to deal with that. If you guys want to watch and follow all of this on a daily basis, we both post every morning on X. So follow us there. The links are in the description. And if you guys like our work, any part of our work, please feel free to hit the likes because that's the only thing we ask. And leave a comment. Your comments are helping a lot, sort of pave the way, and subscribe. All right, so that's the cash. Let me jump to the weekly really quick, and then we'll come back and finish up the rest of the industry. So So here's the SPX from the 2020 low. We're up 300 degrees. This is running at 60 degrees square. This so happens, the high, the square resistance comes up at around 7012, so 7012. All right, that's pretty good. It's within the range boundaries of the daily, and of course we can poke a little higher on the daily. Let's say the next eighth of the square. So we have that to look forward to. Now, week before we ran up, last week we kind of cleared the range. Really didn't make any headway. Really didn't take out the eighth either, right? We have an eighth. Our 3/8 level is 6,900. So 6,900 and 7,000 is bracketing the weekly. Now, so watch that closely. That's the thing there. Yeah, let's just cover the weeklies. So here's the continuation chart, the futures market continuation chart weekly. And I introduced the chart a couple of weeks ago. I don't remember exactly when. Anyway, a couple of weeks ago. So the point here is 7,007 is the top of the square. And then I stuck some geometry in there. We have a pretty good circle. And this line, the gray line that's going above, is pretty good resistance. These are independent items. I just put them all on one chart just to help me remember everything. Otherwise, I'll leave three charts, right? So anyway, the point is we poked up to the geometry, the line up above and the circle, and we reversed. So this is what this is really going to be. We'll watch this for a while. Obviously, this is the weekly. Now, if the weekly can settle above, break just think. I don't know how many of you guys really do a lot of geometry, but if you don't have squared charts, it's hard to do. But if you just imagine if we close above 7,007, this is the futures. Remember, we're breaking the circle geometry, right? We're breaking through to the next square, and we're breaking that line. So all of that combined is a pretty powerful punch, right? So if it's that powerful, we have that much fuel and pressure to get above that and settle above that. Oh boy, we can get into the 73, 65 area is not a big deal. And you can see how that keeps coming up, that 7,300, 7,350. Let's just say 75. Why not? Right in here somewhere. It's possible. So that's if we burst through this. Obviously, for market to move and the way we do the squares, market has to go through all the squares to go higher, right? Or to go lower. That's the idea. And what I'm talking about is the probability of what will happen if price settles above or below a certain level. So for now, we're below. And we could certainly ride the curve, or we can do the normal thing, which is to correct and finish this leg, right? Correct, and then start another one. So that's the story. We're waiting to see what happens at this major resistance level at 7,000. Well, in this case, 7,007. And this is another weekly continuation chart, also from the 2020 low, but this is 45. And here, I'm not counting on this too much, but the reason I'm keeping an eye on this is if we're going to break out, we do have resistance up here at 7250. And if we don't, let's say the other charts have the traction, then the level to watch for support would be around 6890, 6883. Let's say 6880. So if 6880 goes, so what's important about that? If that goes, then we have a much bigger correction in play. Right? That's the thing to watch. Other than that, there's not much to say about that chart, at least from that 2020 low using the square, which has been very useful. All right, so that's the cash and the weekly charts. So there's more. There's some really interesting things. So let's jump to the front month. Front month, I talked about the 50% square. I said, look, because it's the front month and because at the April low, we didn't have, wasn't exactly liquid. So if we get a high in here during March, I'll probably use this for the June contract. But for now, I'm going along with this because very little bit of data, right? Not enough data. But anyway, the 69.54 area was support. We wanted to make sure if it can hold above that, we're in pretty good shape. If we slip below that, that's when we want to be a little bit careful. And I drew this other triangle. This could be a flat triangle, right? Ascending triangle. And the idea here is if we get below the 50% level, that's not a good sign. So 69.54. If we're going to correct in price, might as well correct above that if we're going to go higher. Okay, that's the thing to watch here. And if we get stuck below that, obviously things are weaker. This is the continuation chart going off the same April low using a square of 90. And in this case, this is a square of 72, just so you guys know. And here we stalled out at 7,000, right? So 270 degrees up, we stalled out, tried to get above, but couldn't. You can see either it's a do or die. This is a do or die. Yeah. Because either we get through that or we fail because the line is very clear. It's 7,000 and you can see we're just flirting with that line all week. That's the reason I'm kind of pushing the idea not to get too excited here till we can clearly see the direction, right? For now, because we're just straddling 7,000, not much to do. If we can settle above, great. If we don't, what about this thing about shorting quiet markets? You want to be careful, right? You want to wait for that first counter trend after the breaker. Some other pattern to give you the odds of a move in that direction. All right, that's enough for enough. Is that enough for the S&P? Never enough for the S&P. This is coming off the cycle low in 2022. Again, I think we covered this last week too. I'm not going to cover it too much, but you can see where it comes up at 70, 50, 70, 44 continuation chart, right?
It
And
looks like it's heading right for the corner, doesn't it?
I mean, yeah, that's the thing. So we already tapped it. We didn't go right through it. So we're just hanging there. And the lower trend line is holding. We're compressing like crazy. So that compression is not just going to fade away. That's going to give us something. So that's the thing to watch, right? That corner. We're getting very close to that, right? Towards the end of the month. So we could be off a couple of days. So let's watch that. So that's the level for the continuation chart coming off the 22 low. Let's take a quick look at the Dow. What was the Dow doing this week? Well, it's straddling our level. So 49.484 was resistance. The idea was, if we can settle above or below, well, we should have another thing for settling in the middle. Because that's kind of what's happening. We consolidated here, ran up. So this is not exactly bearish, but it's not exactly bullish because it's a triangle. So it really depends how we break. This can also false break to the up and go down, or false break down and downside and go up. So it becomes messy when it's right on a 50% line. Now, if you guys didn't have this overlay, you'd be thinking, well, if this is triangulating, what's the big deal? Well, what's the big deal is break out of here can give us a decent move because it's 50%, right? So you can see how it's kind of being reflected on across multiple indices, multiple charts from multiple places, origins. Here's a NASDAQ. 25,140 is the square support level. 26,573 is the major resistance. We're kind of in the middle. I'm coming off the April low. And we're consolidating. Here's a triangle. And last week, we talked about, how much can we compress? Well, we can compress pretty tightly. And we did break the trend line, right? So if NASDAQ's leading, you can see it's starting to break to the downside. So watch the, 25,976. It happens to be where I dropped that line last week before. So watch that line, watch that level to see if we can settle above that. And I think it's pretty easy to eyeball that. So till then, we're kind of correcting in time. We did have a cycle high in the NASDAQ here, and that's why we got the correction. And we were looking, this is where that green part comes in. We were looking for it to settle there. That would be the major support. And we haven't really made a big headway, but we are making higher highs, higher lows, which is bullish, triangulating, which, the obvious explanation, well, this is bullish. It's going to break to the upside and go. Sure, that can happen. But we saw the levels using the square, so we want to be a little bit cautious here, not just be jumping in before things actually happen, right? You don't want to preempt your trade. You want to wait till your setup shows up. So when your systems give a setup to buy or sell, now you know, okay, now you kind of have a kind of a framework for either direction using the squares. So that's the story there. All right, let's take a quick look at the 30-minute. Early Monday, we made a low, ran up to, so just remember, 70.16 is the upper square. Lower boundary was 69.44. Ran up to test that, couldn't settle above, came back. 7,000 is the next number. We bounced back up. This was a gimme, right? We had these three drives setting up, and this is a sort of exhaustion sign or climax, you can say. We broke that trend line, reversed immediately, so that's the dead giveaway. After that, we came back, stalled right here at 70.16. That was the second dead giveaway. From there, we pulled off in the middle of the week. I was thinking the 69.33 would hold because that gives a little bit of buffer beyond the 44. But nope, we went to the 3/4 level, held it there, recovered 69.44 on the 14th. Triangulated, you can see the very clear triangle here. Broke to the upside, and we ran back up to 70.16 overnight. 70.16 couldn't settle above. I mean, we've been talking about the 70.16, 7,000 level all week. You know, if we can settle above, we can test. If we fail, we're coming down. Failed, came back down to the midpoint, 50% level, 69.80. Ran back up Thursday night. Friday, couldn't quite do it. Started making lower highs and failed again. Pretty weak, right? Sure, we had option expiration, everything, but pretty soft conditions. And we closed pretty close to the 50% level. So not a whole lot to make out of this either, because 69.80 is the 50% level of the range we're working. And where would it be close? 69.78. So not a whole lot of clues there. Like I said, if we have time, I'll go ahead and cover how we did with the fuse line, but let's see how we do. I think that'll help you guys during it helps every day. I mean, it's much easier to use that and make more money when we're trending, but if we're not trending, it's very useful. Moving on to bonds, our 45-degree level held again, and that would be the 116, 15, 18 level. Ben, you want to add something to that?
It's just a good example of what I was talking about, these sideways coiling up markets that are getting ready for a major move.
Oh boy, is that the truth? It's a little bit, bonds, crude. You almost wonder if they're tied.
Yeah, commodities. I mean,
commodities. Yep.
it's all there.
So here you can see, it's a big range and wide range in time, and we've been bottoming at the bottom of this the second part of the square, the 45 here, and ran up, couldn't quite do it. 1916 was resistance. You can see how we stalled exactly there, came back to the square. If we were going to go at that time, we could have done it. Nope. We fell back down. We fell back through the square line. And now we're just in the middle of all this consolidation, kind of putting in a floor. But let's see. Bonds can do this for a while, but bonds can also trend forever. So let's just see what happens once this is all said and done. But the key level to watch here is at 116.15 or 116.16. If we get above that, there's a fire lit, and we're going to start running. Otherwise, look, you can see it's been managed very well, very tight range, 2-point range. So that's it for bonds. Let's take a quick look at the weekly. Anything you want to add to the bonds, Ben?
Now, let's pay attention because the move coming out of here should be big.
Yes, I think so. If you look at the weekly, you can see you can see the big trend before that, right? You can see from 2020, we had this big nice trend all the way down to 23. That's what I mean. When we start trending, it can really go. And then we got into the range, and it's 144 is where we stalled out first, and that's our reference line still. We've been on both sides of that, and it's been acting sort of, on a weekly basis at least, sort of a mean reversion point. And if you ask what that is, that's 119.14, let's say 119 and a half. So that's the level to the upside. 114 is support. So obviously, if we're going to start a big downtrend, we're going to have to take 114 out and then set up. But long as we're up here, it's a weekly chart. It's a little bullish then bearish, and we could certainly go up and test this 119, 120 area. So for now, kind of in a holding pattern, right? A little bit like crude. Speaking of crude, we ran up to a magic number. We've been working with 61.61. You can see 61. We ran up to test it, came back down again. We had to put 61 level, and got rejected. Now we're on top of the lower trend line. I mean, if this all holds exactly, this is very bullish. And of course, if we take this high out, we're off to the races. Otherwise, false break, we're going to consolidate a little bit longer, and not much to do. We'll just wait it out and see what comes. Looking at the weekly crude chart, and this is running a square 72. You can see the square level. We're just hugging the square level since last year, and that comes up to 58.50. And if you look at the other chart we've been watching, this is coming off the low in 2020. We slipped under a little bit, and we're just holding right above this level. So that level corresponds to the high in 22, and that's why I watch both. You got to watch the highs and the lows, right? So from here it makes more sense because we're sitting right on top of the 72. All right, looking at the gold daily chart, we talked about 45.10 being a key level last week before that. And you can see how the levels held, like 43.30. We wanted it to not get stuck below. It was stuck above, let's just say. Ran up to 45.10, broke it. Now we're free of that. So 45.10 is the new base level. And look, this 46.93 is right there. It's one full cycle from the June low. Let's see what happens. That's possible, as long as we're above 45.10. And this is coming off the June, I shouldn't say June low. It's coming off the breakout point, the triangle, right? So that's that. Let's take a quick look at silver, then I'll cover all the metal weeklies together. The 81, 82 area, silver we had fell 50% level was 81, so 80.70 to be exact. And we had it square out right there in late December. And you would expect some kind of a correction, whatnot. And we corrected 10% or so, or a little more. So that was okay. That's a correction in price. And then the idea is we want to hold about the 72, which we did. And from there, getting above 50% level, 81 again is very bullish. Clearly, it was bullish and we ran up. Looks like we ran the stop and went right above 89.90 level. 89.90 level is a big deal here, obviously, not just because it's up from that low back in 22. So I think unless we can settle above this 89 and a half, we're going to probably sit and consolidate. And if we can do that consolidating business above 85, it's probably bullish and a lot more to go, right? But generally speaking, overall, above 80, this 50% level still is very strong. And volatility increases as corrections. Volatility increases as we go higher. So I think corrections down to 80, 81, this 50% level wouldn't be unusual. The fact that we blew out this square means we're still in a strong position. What do you think, Ben? Well, you're going to cover the weekly, so monthly, that's going to be great. This is going to be a good addition to what I'm doing here. Just on the
Yeah, I'll
daily.
hit the weekly, monthly on both, and you
Yeah,
can see
yeah.
and Barry, the moves have been so massive. I had to change my scales
Yeah,
on
you
the
can see
chart.
I'm being a little stubborn about that.
Yeah, yeah.
Yeah, you can, but if you want to see the full screen, you can see even, I mean, this is a huge screen I'm running and we're out
Massive.
of the screen
Yeah.
from the 22 low, but I want to keep the perspective in a certain way for just for me. But if we end up settling, baseline becomes 80 for silver, obviously I'm going to have to change the scale, when we start settling down, volatility settles down a bit. But for now, yeah, it'd be great to see the monthlies and just get into that. All right, looking at copper, we talked about the big square level here. We're kind of straddling it. It's 588. We ran up to the first quarter line, 611, 610. Um, this had all the signs of a false break. Sure enough, a couple of days hard down, but we recovered right away and went on to make another high, which is certainly a false break possibility because look at the pattern, right? We made the high, reversed immediately, and then another down day.
And a
So now
beautiful three drives, right? Look at the three
and
drives.
yes, and we have three drives. So copper is very interesting, I think, at this point because there's a trend line. Did we break it? Maybe. But the thing to remember here is this 588. If we're below 588, I think all this is a false break, and we're probably going to roll over and correct a little bit. But again, as long as we're above this 560, 565, 564, three-quarter level, it's primed, meaning ready to go. So that's copper. Pretty good. Looks like we're hitting some level. So it's probably going to get a little bit herky jerky here.
If people that don't aren't familiar with the squares, go back to that chart for a second. Look at the
Hold on.
first time copper
Yeah, hold on. Let me get there.
was flirting with 588. Look what happened.
Yep, right here. Mm-hmm.
I mean, that tells you that level is super, super
Yeah, and here was
important.
that big false break, and
Yep.
we called this out. I know I don't want to say we called it out because somebody made a really good comment last week saying, you guys don't have to say we called it out. You guys are doing this.
The
Uh,
squares called it out.
Squares called it out. And just in defense of that comment, the reason I said that, the reason I say we called it out is because we have a lot of new viewers every week, and just to establish some credibility. And the other thing, I just thought of it. I don't want to break into this, but just to say, and I wondered about it. I go, why do we say that? Because then I realized, trading is a kind of a game, right? And we're playing. And if you're playing, there's a winner and a loser. So, and in since we're not trading, this podcast is not actually trading. Trading is done separately, right? We trade, and this is about analysis and talking about the markets. So here, the win would be the proper analysis that will unfold correctly, right? If we say, hey, that higher probability is this, and if that unfolds, well, great. Now, yes, we cover both sides of the market. We say if we break out of here, it's going to go higher. If we break down, it's going to go this way. And the reason when we say it's called out is if we have cycles coming in, which is not every day, and we have price and time, the pattern, and everything hits, and then we say, look, we have cycles here. So, it's very highly likely if we can't keep the price level, we're probably going to go down. I guess it's just identifying the price and time and saying, hey, here's an inflection point. So I guess it turns out like maybe we're calling the inflection points more than a high or a low. What do you think, Ben?
I'm going to give
but
a
it's kind of
clue.
a game, right? It's a game.
Right. No, it is a game. And I want to give a clue to all the listeners and people that subscribe to this channel. I've known Barry, we're in our second decade of knowing each other, so it's been a while. When he calls out a high or a low, it doesn't happen often. So when he does, pay attention. And when he says I called it, it's because he doesn't, he's not one of these guys that makes 100 calls a week. And if you get 50 right, you could say, look, I got this right, I got that right, I got that right. When he calls out a high or a low, pay attention. And that's all I'll say on that.
All right. Hey, thanks, Ben. Well, the call out it was about this level in copper and 588. And you can see when price and time, it was off by a couple of days, but you can see how, the square obviously hit a little early, a bar early, let's say, and huge correction, right, Ben? I mean, this is
Yeah.
what you really want to watch and wait for and catch those. So anyway, we're back here. So 588 level is back in play. It looks like we're really pushing to hold above, and let's see if we can do that. But all the metals seems like time for consolidation, and copper certainly does. So
I mean, I think, and
mhm.
specifically that we're talking about copper. What Barry's trying to say, and what I'm trying to say with when we talk about the squares, when you're at one of these levels, right, the probabilities are elevated that the moves are going to be more dramatic and bigger. because they're really significant. Like it's either going to fail at the level and you're going to see the people who thought it was going to get through rush the other side or rush for the exits, or the people who thought it was going to hold and went short are going to have to flip around and go long if it clears the level. So
Right.
it's a copper's giving you a good example of what happens at these
Hmm.
major decision points, and we're at one of them now.
And this is a great one. And look what happened back in September, October, November, right? So we broke, we came into the low, another low that, this is what that box is. We were expecting the low to come in there, and it did. And now this 496 became, after that, this square level became important. And you can see how here we settled above, right? We ran up, and this is what settling above looks like. Now here we know, when it's a descending triangle, but we know when it breaks to the upside, it's going to go. And and this is what this line is in the shady box, was once we break this consolidation where we're going to run. That's why it was there. And we ran, right? Midpoint, little bit of a break, catch the breath, and then boom. So copper runs pretty well with these squares. And so that's that. let's let's move on to Bitcoin. All right, Ben, I'm not going to say it, but so we have a high here.
Yeah, yeah.
We had a low and
Both called. I'll say it. Both
yeah,
called.
both called. So anyway, look, so we made the triangle. We're talking about which way it should break, and usually, these triangles, fourth wave will consolidate and break to the downside, giving us a fifth, or the fifth can fail and run up. So in this case, the fifth failed. And last week we talked about, if this holds and the midpoint, this area holds, that we're going to run up, and which we did. So from the low to this high, everything's cool so far. It's been pretty much as expected. So now we hit this 97,790 level, it's been on the board. You guys can check the videos. So that's resistance. You can see we hit it last week and we reversed. Now the key is this 9280, this level, this dash line. So watch this 9280. If consolidations can hold above that, Bitcoin's in pretty good shape. The low is intact, and we're getting higher lows. And obviously, a low here would continue to hold that higher low pattern. Everything's cool, right? And obviously, if we break this trend line that's coming down, I think it's coming out of a square to the upside that kind of releases that, and we're kind of done with the downside for now. So watch those things. So upside, we have 97,790. Below for support, we have 92,080, right? So that's it for Bitcoin and daily. You guys should be okay with that. If you guys want some intraday daily Bitcoin, let me know. Maybe we can work something out and start posting. Moving on to the dollar.
Hey,
Finally,
you know,
yeah.
it would be interesting.
Uh-huh.
A little research project you and I could do. Maybe we look at some fuse lines on Bitcoin.
Yeah, yeah. A couple of people have asked in the comments. So,
Yeah.
and I said, look, we only have so much time in the morning. Really,
Right, right.
believe me. So, but it's worth doing. Let's see. That might be
Let,
fun
let,
to do.
yeah, let's
Yep.
check it out.
The thing is, we're not actively day trading Bitcoin, so then we're not motivated to do it. So, but if
That is
it might be
100%
worthwhile.
true.
Yeah.
100% true.
So it might be worthwhile. Yeah, it's a good research project. All right. So getting on to the dollar, we talked about this low and how it's in the middle of all that, the earlier consolidation, and we're bullish the dollar. So we're looking for it to go up and test 99.50, and that would be the first test. If we can get above that, obviously we're getting up above 100, and 101 area is really the big level to watch, right? If we can break that, then we're going to have a run. I don't know about all the damage, but we're going to have a run. But basically, this is really cooking up. So let's watch the pattern. Higher lows. We're looking for higher lows, higher highs. Settling above 99.50 is very bullish. So that's what I have to say about that. Let's take a look at the weekly dollar. Wrap this up. Weekly dollar. Well, if you guys like levels, 97.83, very, very tight range. I had drawn up. This has been here probably since 24, probably on the way down. And we squared out, came up, and anyway, you can see how we stalled right at the support level, and we're starting to go up. So obviously, look, we're making higher lows. And if we can take out this 101, I'd say 100, 150, let's say 100.5 dollars in really good shape. All right. So that's
Hey,
that.
you know what, Barry? If you look at go back to your dollar weekly for a second.
Uh-huh.
If you look at the spike highs when we had the dollars,
Mm-hmm.
everybody just go back and look at your charts. What what happened in the equity markets?
Mm, right.
COVID lows in 20, that's the dollar high,
Mm-hmm.
and the bear market low in 22 is the dollar high.
The low. Exactly.
Yeah, I mean that's
Uh-huh.
the low in the S&P is the dollar high.
And the 2025 high, the big consolidation that happened on the drop into April.
Yep.
That's that, right? Right there.
Yeah, yeah. So
So
let's see. Let's see what happens.
yeah, I should be careful what I say. This could be a clue, right?
Yeah, yeah,
If we take off here, that could be a clue. And there's plenty of room to run. And look, after this square happened, I've been sold on this, right? We
yeah.
squared out
That was
and
the low based on the square. Yeah.
right. So since uh July, June, July of 25, we haven't really violated that other than the false break, which just adds to the story. But the
Sure.
dollar is prime, man. And the big test was here. We didn't talk about it too much, but really the big test was holding this range. If we fail this, I think we're going to be more sideways, right? Either sideways or go down and retest all this and do kind of a
Hmm.
bottom forming. But the fact that we held it and we reversed immediately, we're up 2 weeks. So yeah, it's a bigger deal, I think.
I mean, it
Thanks
just
for bringing
has
that
me
up.
wonder. It
Thanks for
just
bringing
has
that
me,
up.
yeah, it has me wondering, like, okay, what's going to happen that's going to drive everybody into the dollar? What has to happen in the big picture of the world and everything? We'll see. It's the chart
Right.
is telling us something. It's telling us something, right?
Clearly,
And eventually
clearly.
we'll find out the reason, but the charts and the price action, always anticipates whatever the event is.
This is important. And the fact that we squared is important. That tells us that was a pivot. We don't have to guess about this.
That's right.
You know,
So let's
that's the
see.
difference. Yeah. Hmm.
Just keep your head on a swivel, everybody.
Yeah.
That's
Yeah.
that's the
Very
thing.
good. Very good. And let's see what the euro is telling us about this. We're big bears about this. We were talking about this yesterday. This was resistance up here, 1792 area. We talked about, if it reverses here, we're going to test the 50%, which we did. And last week, I mentioned, if we can't really hold this level, we're going to go lower. And you guys got sell setups here and in your systems, that worked out, right? So now, obviously, 1643 becomes 1650, let's say, becomes resistance. And if we fail there on counter trends, we have this 1500 level look forward to. Watch out for the counter trends, right? So, but this is all setting up very bearish. The high came in on a cycle high. Pretty good. Yeah. Can I say? Let's see what the weekly's telling us.
What it's saying is there's going to be a lot of opportunities in the currencies here pretty soon.
Yes, I think so. At least down to 109. All right.
Right, right.
So this triangle, again, triangles break, markets tend to run. So this looks like, it looks kind of trappish to me because we could definitely fall straight to the upside and fail like we see a lot in currencies. Or we could just triangulate and roll over like we did back in 2018. I remember this high and the long bear market. So we can triangulate and drop. Doesn't always have to be to the upside. Anyway, 50% level. We've been watching this for a whole year. It feels like 1654 is the key level for the weekly. We couldn't really hold above. Now we're coming down. So if we break this trend line below and from there on, the counter trends become fair play.
And Barry, if you zoom
Mm-hmm.
out on that chart, and the weeklies and monthlies let you zoom out, look at it's just a series of lower highs and lower lows. I mean, look at that. Since 07, 08,
Oh 08 high. Yeah. Mm-hmm.
it's
Yeah,
just
that was it. Ever since that. Now here, ever since we had the high in 21
yep,
and to the low in 22, we've been range bound, right? We're in this range, which the square captures perfectly because you can see that's 144 degrees up. And
right.
if you look to your left, you can see that high came in exactly there. which
Yep.
means from that high to that low was exactly 144 degrees. Okay.
Yep.
So yeah, we kept trending lower and a big consolidation with no big upside gain, right? And up here is resistance to the max if we ever get there, but it's stalling out here. So see what happens. Yeah, thanks for the reminding me about the bigger trend and the fact that we're stuck within this range bound in the 144.
And is that an ABCD from that low in 22 to the high? It looks like
A,
it's
B,
not.
C, D. Oh boy, that
Yeah,
would be, I haven't checked that.
it looks close.
Man, nailed it. Nailed it.
Oh,
That's it. So, well, that saves a lot of talking, right?
ready, aim, fire.
Yeah. So without even seeing that, but what's funny is that came exactly at the 2/3 line. That's that
Yeah,
dotted green line, which is
yep.
even better, right? Right there. And now we're starting to maybe start doing an ABCD down, right? Down to the next uh this 141 level, 144 level.
I mean,
Anyway,
if it says that that counter trend's done, then the next leg down is starting. Bigger picture, right? Like
absolutely.
like the swing you that you just showed did the
Hmm.
144
Hmm.
degrees.
Hmm.
So
Absolutely.
par and below looks like a real possibility.
Yes, and you can see that this leg was pretty close in time too. It was only off by a couple of bars, so that's
Hmm.
not bad for a weekly. So this looks good. We got a lower high, taking out 1654. And without getting into details, now you guys see why we've been so bearish about this.
Yeah. Yep.
All right, let's move on to the last couple of things. Hang Seng, uh, 26,230 was the big deal. We kept talking about how, if we get above, it's in a better place, more bullish than bearish. And there you go. We're above. And as long as corrections, pullbacks hold above that level, Hang Seng's in pretty good shape. But you can see this 27,500 seems to be there. It's like the S&P 7,000, been tapping around there. But we do have a line there, 27,500. So let's see if we get there or we just consolidate and roll over. But the rollover point here is 26,230. All right, that's it for me. Let's just take a quick peek at natural gas for the natural gas fans. Man, that was the biggest fake out, but it did square out on your charts. Ben, I remember you talking about that, and ever since that, we've been down back to the baseline 298. So, what to do? But this baseline's above, the foundation that we put in back in 24.
Right.
Here, you guys can see it down back here, 2024.
Yeah. We just got to wait for the next setup.
Yeah,
See,
we're right at the 50% level from there, which is
you
three
like to call
quarters.
it balance points, and that shows a
Yeah, there
pretty,
you go.
that's a balance point, right?
Yeah, this is definitely a balance point. So what happens? All right, let me put it back to you. Well, we got triangle mania here,
Yep.
and that 25,720. Who knew, man?
Look
We've
at
been
that.
here. I'm never gonna forget that level.
Yeah, that is key. The 100% key for the NQs. The thing that was struck me by, your segment, Barry, which was
Hmm.
fantastic, is
Thanks.
it was such a boring week, right? But look at all the clues that you were able to show people that give us insight into, what could be going on and what the odds potentially favor, coming out of this. And that's why I think it's super strong evidence for why you got to pay attention in these consolidations, because there are sort of breadcrumbs that are dropped by the players. You can see their footprints by watching for those certain things. And I thought that segment was great.
Well, thanks. Yeah, we didn't. I wasn't really sure where it would go because not much happened, right, on the
No, you and
surface.
I were, yeah, we were talking before the show. What are we going to talk about? It was like a nothing week, but then, when you go through, you can see,
Mm,
there are still clues when when you don't make any progress sort of price wise.
always,
And
yeah.
and the NQs is a perfect example of that. I mean, if you didn't think 25,720 was key, just look at the price action around here for the past month and a half,
That's
right?
mean
And
reversion for you.
yeah, and we're all this week we were crisscrossing it. And so there's no decision here, but we know we're coiling up for something. Now, on the bullish case, you can say higher lows keep coming in. We're holding this one by one trend line. And in the on the bearish case, you can say, we've made multiple attempts to clear it and haven't been able to, stay on top of that level, and we're making a lower high. The one thing I put in that I want to point out that I think we should pay attention is I put in some time counts. Low to 45 is coming up this week on the 23rd.
Uh-huh.
So
Yep.
that would be low to potentially a high, could be 45. And if we're looking at a high to high, I looked at calendar days, 90 puts us under the 27th of January. So we could,
Yeah, I saw some other cycles coming in towards the end of last week of January. So yeah,
yeah, I mean
it
there
lines
there's
up.
there's some counts lined up right there. So again, the key level. We don't have to beat a dead horse, but watch this 25,720. See if we can clear it or get stuck under it. Either way, we have a strong directional move. So again, the key level here is that 25,720. If we can sit on top, we'll get a big move up. If we get stuck below, we could get a big move down. So that's the thing to watch. Patience and watch. You got to pay attention and be patient. Let's quickly look at the calendar day because I want to show you how we're holding this, you know, by by our fingernails. We're holding this one by one. Remember we talked about this a few weeks ago, Barry, how this one by one, and you can see this week we were really, really struggling to hold it, but we closed kind of right on it.
Yeah, and that's an important one because it's starting. I mean, we can see it's starting at the April low,
Yep.
so it's a good one to watch. And
Yeah.
so let's see.
And for those who aren't super familiar with Gann, these one by one or 45-degree angle trend lines sort of define the major trend for him. Like, so this is a bullish trend. If you get stuck below the 45, it becomes bearish. So that's why this is important. Just wanted to quickly show that. Let's jump and look at the weekly. On the weekly, we have a level that's also extremely important, 25,932. And so if you combine this with the daily, you can see that sort of 200-point range we've been stuck in, why we're getting this, one day up, one day down, one day up, one day down. We're sort of bouncing between these two levels. And this weekly's been in play for a while. Like you could see all the way back here to into November that we were tapping it from below. So weekly basis, 25,932 is critical and important to watch. Let's take a look at the monthly. Monthly to me looks like we're doing a triangle here, right? We had
Boy,
this we had this down bar, inside bar, another inside bar. Now we did poke above that other inside bar, so that's usually a signal, but let's see where we have to see
mhm.
where this monthly bar closes to get the full breadth of that signal or the importance of it. The monthly, the one of the key things is, high to high, we did a 47. And again, that's 47 months, and that's in that Gann death zone. What is it, 45 to 49?
49. Yeah,
Yeah. So it's in there. But the bigger clues, right? The shorter term clues that can help us is the daily here, and in even the weekly. And we can pull the weekly down here so you can take a look. 25,932 weekly, and on the daily, 25,720. Anything
busy.
else you want to add here on NQs?
Yeah, we have everything we could use. That's it.
All right, let's take a look at Bitcoin. Barry did Bitcoin, but let's do it really quickly here for you. All right, the big level here for me, and you can see why, 96,676, right? 4 days in a row we were testing it, even got above it a little bit, and now we're back below it. If we get stuck under here, the pressure is going to be down to this 85, 151, back down to test these lows again. So the key this coming week for the bulls, 96,676 on a daily basis. Let's take a look at the weekly. Now, here, the last 2 weeks, we've been able to clear this 89,252. So that is bullish from a weekly perspective here. We have this target zone down here that we think ultimately we're going to come down and test. But right now, as long as we're holding above the 89,252 on a weekly and clearing it, we could get that push to 107, 107 and change, which is
Mhm.
50% of the square.
That
We
89 number is important now.
super, super important. Because if we lose that, then the pressure on the daily won't be able to stand the pressure and it'll get
Yeah,
pushed down.
exactly. Yep.
Let's quickly take a look at the monthly. Here's your monthly. And we've been straddling this 93, which is pretty, it's pretty good for the Bears that I mean, the Bulls that they've been able to, prevent a monthly close the last 2 months or a full monthly bar below that 93,000. As long as they do that, we can build and push on the lower time frames and see if they can put a base in here. Because if they do get stuck under 93, if we get a full monthly bar under there, we're heading down to 74.
And that one by one is coming off the low in 22.
Uh,
I didn't see it before you pulled it down.
about
Almost.
23,
Okay. No. Okay. Okay.
23.
Got it.
Yeah,
Got it.
the low in 23. So it's not
Okay.
too bad. It's a
Nope.
decent trend line. Bitcoin it's stabilized and it's building. You have the levels that you need to watch. Clearly, on a daily basis, that 96,676 is key to the upside. And for the support, look at your weekly 89,000. We lose that, then it's going to be trouble. Anything else you want to add here on Bitcoin?
No, we're good. We're good.
All right, let's jump into the commodities. I'm not going to talk about soybeans. I highlighted it last week. It held that support. It held it again this week. It's banging around down the low, so we got to be careful there. But just watch it. Hopefully, we can get that thing moving to the upside again, and then we'll put it back on the highlighted list. The ones we're going to talk about this week. Let's go. We have a few, just one commodity, and then we're going to look at the weekly and monthly on gold and silver just to give you some perspective. The one I wanted to talk about was cocoa. I talked about it possibly being bullish right here, and we got this nice because we did a 240 in price, 240 in time. That's a good square, right? 240 by 240 is a very good square. And you can see we had, these three waves down into that low. But, like they do a lot of times in commodities and the futures, we had a run up and then we come down and look what we did at the low.
Our favorite.
Yep. We made a lower low and then reversed it the next day. And this is a daily. So we had a daily reversal up. So does that mean you jump in right away and buy cocoa? I mean, you could because you have a decent, risk reward here. But what we'd like to see is, okay, let's get a push up and can we get a higher low? Then it gives us, a little higher confidence that, okay, this low was a real false break and it's going to hold. We have a higher low and we can trade against that. Clearly, the 5,700 level that we talked about when we were, pulling back here and hoping we held it, is going to be a key level. If we can get that first thrust to push up and sit on top of that, that would be the ideal setup. It's really early. I just wanted to point it out. This is what we look at. We look for a square, and then we look for some sort of reaction, and then this kind of false break is the next piece of evidence that says, okay, this low is good. The square is good. The low is good. This was just a move to, grab some stops and grab some longs for the direct move the other direction. So
Hey
let's
Ben,
watch that. Yeah.
there's an example of that. If you look at the low in August of 24, right? And
Hmm.
then back in October, we came back to do a false break, higher low, and we took off, right? I remember that because we traded that
Yeah. Oh, right to the high, right?
right to
Yeah.
the high. Yeah. But
Yeah.
you see how it's set up. We got the low in August,
Yep.
right? And then we screwed around for a little bit, rolled over, and did the
False
false
break.
break, higher low. Exactly what we were just saying.
Yeah. First push up, higher low, and then we
Mhm.
go.
Right.
And this is the one I remember when I was at the gym and they had CNBC on right near the highs and they were like talking about cocoa all-time highs and everything. I was like, "Oh shit,
Get out of
you
this
better you
long.
better tighten up your
Yeah.
stops because it's done
Yep.
once it
Yep.
makes the, CNBC market alert for cocoa, something is, not that popular in terms of people
And that
trading it.
triangle that followed broke to the downside, right? So,
That's it, right? This big
mhm.
triangle here. So anyway, this is super early, but I wanted to show you because this is kind of a good example of our methodology and how we try and find these corners and find these good risk reward spots to get in. And Coco is setting up. We'll just give you a quick view on the weekly, monthly, where you can see the false break and sort of the pattern. Clearly we were in a downtrend here. We thought this was good, right? We said that half square was really important when we pushed above it. If we can stay on top of that, hey, we could get a nice move up. Well, they had different plans. They needed to grab some stops and grab some longs for the potential ride coming up. But there's your weekly false break, right? Same thing. Now we want to see the big thing here is if we next week can get a weekly reversal, that'll help, solidify the evidence that, hey, that's a good low. All right, let's quickly take a look at the monthly. And again, there's your view of the false break.
Wow, look at
Obviously,
that.
yeah, obviously weekly, monthly got a lot of work to do, to become bullish again. But this is how the it evolves. It starts in the daily and then filters into the other ones. So that's Cocoa. Let's quickly jump over to gold and silver, and we're going to look at the weekly, monthly. So here's gold. This is why you see how I had to change the scale, Barry, so we could get the perspective of where it started.
Yep,
But
yep,
look at
yep.
this on a weekly basis. Look at this, right? We're at 216 up. This is a square 72, so we're 216 up. Last week we cleared it.
Clean break, yeah.
So
On a weekly.
45.28, yeah,
Hmm.
weekly basis, right? Even after this monster move, like it didn't do this, right? It didn't do this crisscrossing for a month or two or months. Here we had one, two, three, all in within a month. Looks like we're going to clear it. But you know the number now, 45.28 weekly basis. As long as the low stays above that, 5,100 gold is coming. Now, if we get stuck below, then we got to start looking at, okay, how deep is this correction going to go? Is it going to be like gold has done in the past and go sideways, or are we going to get a bigger correction? Let's quickly take a look at the monthly here. This is from the 99 low, the square set. This is a 90 or 45 square. Pretty important spot, huh?
Very important. Very
That's price.
important.
That's price and time, right? 270 in price and 315 in time.
Yeah, that's a big deal. I didn't see that. That's a
That's a
monthly.
big one. This is a monthly,
Hmm.
right? This
That's
is
a
a
good one. Yeah.
monthly
Hmm.
set off the 99 low. Does that mean gold is done? Oh my God, you got to short it, get out of it? No. Watch the level.
Yeah.
Look where we close. 4601, the level's 4607.
That's that 42, 44 is huge support now. So,
Huge, huge, huge. But again, let's look at if we clear it, right? And then again, this is monthly bars, so we're not clearing it this month, that's for sure. But if we clear above it, 5,000 gold's realistic. It's the next half square up. All right, that's gold. Let's quickly jump over to silver. This is your weekly silver. So what's the big thing to notice here? 82.12. I mean, it's similar to your level. I think you had 81 and change, right?
yeah.
So 82.12 is the important spot. We have not cleared that level yet. The low last week was below that. These two bars tapped up against it, but this coming week, if the low stays, above 82, we're clearing it, and $100 silver's next. This obviously is a pretty steep trend line, but for now, it's holding, right?
Hmm.
We need a pretty big correction to violate that. I mean, you'd have to be down here this coming week. $62 silver.
Yeah.
Uh, Big numbers 82 right now.
Yeah.
Stay
The other
stay
big
up,
number is 104.
and then the other big number is 104. All right, let's quickly look at the monthly. And the perspective on these is just fantastic. Look at that. This is from the 2001 low.
Yeah.
and that's 180 by 292.
Pretty good work. Pretty good work.
So 94.38 to be exact, is the next sort of ceiling for silver. And it's not, some BS, number I'm pulling out of a hat. This is off of 2001 low and it's 180 up. So that's significant. Get above that. I mean,
I mean,
the numbers get massive.
94 being right there, it's a little too close to be counting pennies.
Yeah.
And I'm just wondering, I made a post last week about, where do you start taking some off, like when you're going vertical, near impossible to figure that out.
And what
But
I guess what you have to do is you have to say to yourself, I'm going to take some off and I know I'm going to be wrong, but it's the right thing to do.
I'm off. I think that's the key, partials.
Yep.
because when you go vertical, buying the next pullback is not the easiest thing to time that out.
I mean, think about this. You could pull back to 49 and still be technically
But that would
super
be a
bullish.
buy. That would be a buy.
Right. It'd be 50% of the up move,
Yeah,
right? Right back to
exactly.
the 90.
Yep.
And it would be super bullish. Cut it in, almost cut it in half and it'd be super bullish.
Yeah. But that's the
That's how,
difficulty.
but
But
you don't
partials
get,
are the way to go.
yeah, and you don't get this perspective if you don't look at the monthlies. Right.
Look at
And
that.
that's
Wow.
I know
Wow.
you love the monthlies, Barry, and you always say, hey, let's look at the monthly because it does give
Hmm.
you that big picture view.
And this is
What
a
a
great time to
move.
look at it with the top price and time coming together.
Yep.
And this move is going to be there on the charts for 100 years, right? Because it's just not
Historic.
something. Yeah, it's historic. Because
Yeah.
when else do you get move like this? Silver of all things at a
Yep.
hundred bucks.
Boring, boring silver. And that was the thing I was thinking of. I was going to put a post on X, but I haven't done it yet. I was going to say all the people, and mostly it's the crazy, the crypto crazies that were mocking anybody who was buying gold or silver
Hmm.
over the last, 3, 4, 5 years, calling them out of touch. They don't get it. They don't. I mean, just look at these charts.
Exactly. And
That's not.
while the headlines were pushing that too, I remember seeing headlines about metals are out, crypto is the new gold, and all that.
Mhm.
Guess what? Somebody was accumulating all through that time.
Yes, they were. And then for silver, it was right in here, this whole move here.
Yep, exactly.
And how did it start, Barry? With an ABCD down.
Yep. And I remember you buying right there.
That's right. Yeah, that's true. It is true.
Hmm.
Anyway,
Hmm.
blind squirrel finds a nut every once in a while. But listen, the show we started off thinking, oh my God, what are we going to talk about? And I think the show was great because I think we found a lot of insights to be able to show you things that are happening sort of in the middle of this chop. And trust us when we say that the moves coming out of here are going to be fantastic. So pay attention. Don't get sort of bored to sleep by the sideways. Know that big moves are coming and volatility is going to be picking up. So have a great weekend, everybody. It's a long weekend, right? Because we're closed. The stock market's closed on Monday.
Yep, yep.
So have a great long weekend, and we'll talk to you next week. Great job, Barry.
Thanks, Ben. Good job. And you guys, good weekend to do some homework and rest up.
Exactly.
All right. See you next week. Bye-bye.
Take care, everybody.
Mhm.
Bye bye.
Bye.